the study guide for the final exam, okay? So I already broke it down earlier that the final exam, the last 20 questions is going to be, you're going to be responsible to complete the entire accounting cycle within those 20 questions. So the first 10 questions is you're going to journalize a bunch of transactions, okay? Obviously, you're going to post those to your ledger. You're going to complete an unadjusted trial balance, okay? And you're going to also complete some adjustments, okay? So there's 2 adjustment questions, okay? You're also going to complete complete an adjusted trial balance. You're also going to complete all 3 financial worksheets, so income statement, statement of equity, and the balance sheet. And you're going to be responsible for closing the books, okay? So in this case, this is a great way to practice this. It's going to be a little mini study guide for that final exam because it's going to be more or less same or similar to this kind of concept, okay? Where here we are looking at the journals. I'm going to be giving you the journals. I'll be providing the chart of accounts for you, and I'm going to be also providing everything that you need to be able to answer those questions. So again, this is just a mock, or this is a study guide for the final exam, and it's another example of completing the accounting cycle, okay? So again, starting with the very first one is step 1 is you're going to, or steps 1 through 3, you are going to collect the source documents and then of course analyze as well as journalize. So in this case, here is the scenario, okay? Starting with the first one, August 1st, you borrowed $15,000 cash from the bank for your business, okay? So in this case, right off the bat, you borrowed money. So in this case, what did I do? So here we're using the business chart of accounts. I borrowed money. So that means what did I do? I took a loan, right? I borrowed money from the bank. All right, so let's see. Is there anything that looks like a loan? Right here, business loan. Okay? Business loan 210. Okay? And it is August 1st. Now, upon that business loan, right, since it's a liability, what should I be receiving from that loan? Well, I borrowed $15,000 cash, so that means I received cash out of this, which is account number 102. Okay? Okay? And if you want to put descriptions, you can. In this case, I'm not going to be asking you to collect any of these work from you. This is your spreadsheets or your worksheets, which one you're comfortable with. You can reuse them over and over and over again. Just make sure if you want to double check your work, then that's up to you to do it. I don't need you to submit anything to me. Okay? So there's the first one right here. Now, what I taught you is once you journalize something, you're going to post it immediately to your ledger. Okay? So in this case, right here, step 4, post to the general ledger. I just got some cash. Okay? Oops, too many zeros. Okay. That means right now I have $15,000 in cash. And let's see, I took a loan, a business loan. Here we go, business loan. Right? It's a credit balance because I increased my liabilities. Okay? So then let's see what is next. Next, it says right here that on August 3rd, you deposited $12,500 cash into your checking account. Okay, I deposited money into my checking account. That means I subtracted the money that I have on hand and I dumped it into my checking account. Okay, so straightforward this transaction. So it is August 3rd, right? You increase your checking account and you decrease the amount of cash you have available on hand. Okay? For $12,500. Okay? Again, if you want descriptions, I don't care if you do or not, but this one, I'm not testing you whether you are going to be doing the descriptions or not. And again, I need to post that to my ledger because now I have money in my checking account and for $12,500. Okay. And I decreased my checking account. Right, which is a credit balance, right? I subtracted 12,500. So that should leave me with 2,500 left in my bank. I mean, in my check, the cash I have on hand, I only have 2,500. Okay. Next, on August 5th, you end up paying 1,500 for rent with a check. Okay. So in this case, I paid rent for a rent, okay, with a check for $1,500. So if I just incurred some rent, okay? Here we go. We got some rent expense, okay? $610. Now, how did I pay for it? I paid with a check. So that means that's going to come directly out from my checking account for $1,500. Okay? For $1,500. Okay? So that means, right? I just had some rent expense. So let's see where rent expense is. You got sales, cost of goods sold, freight expense, purchase returns, rent expense right here. Okay? Okay, rent for August for $1,500. Okay? And that means I have to update my checking account because I end up writing a check for rent, right? So that means I spent money from my checking account. Okay. So I spent 1,500. So you should have 11,000 left. Okay, you should have 11,000 left. See what happened next. So we just paid rent for 1,500. Okay. August 8th, you purchase 100 coffee mugs at $1 each on an account. Okay. Use periodic FIFO. Okay. So we know that much that it's periodic FIFO. So in this case, we purchased 100 coffee mugs at $1 each on an account. Okay. So in this case, periodic FIFO. What does that tell me? Okay. That tells me that I don't really keep track of it very often. Coffee mugs, I bought 100 of them on an account. Periodic, so in this case, every time we use periodic inventory, what are we referring to? Well, periodic, we usually refer our inventory as a purchase expense and a freight expense, right? For August 8th, okay, periodic mugs, 100 of them at $1 each on an account, okay? And freight was $25. So that means I had a purchase expense, a freight expense, and I placed it on an account, so it's an accounts payable. Okay? So let's take a look at my chart of accounts one more time to get all those numbers. Okay? So purchase expense is 605, freight expense is 601, accounts payable is 201. So 100 mugs at $1 each is going to give you $100. Freight is $25. So in grand total, you owe $125. Okay? And of course, here you can make your note. This one is where it's necessary, right? That you purchased 100 mugs at $1 each. Okay? So in this case, that means I have to update my purchase expense account and my freight expense account. Here we go, purchase expense. Here we go. That for $100. And then the freight expense cost me $25. And then I placed it on an account, so I end up increasing some liabilities here. Here's accounts payable. Purchased 100 mugs. Oh, for $125. Right? Now, if you go down below, right, because it is considered an adjustment entry, I want you to plug in your values into the inventory worksheet provided. So in this case, the date that you purchased it was August 8th. Quantity, right, is we purchased 100 of them. Unit price, $1 each. Purchases is going to be $100. Freight was $25, bringing it to be $125. Now, what's my cost per item going to be? I'm going to take my $125, divide it by 100, and it should be $1.25 each. Okay? So, let's see what's next now. Okay. Next is going to be that on August 10, you purchased $65 of supplies with cash. $65 with cash. Okay? $65 worth of supplies with cash. So let's see. Here you go. I have supplies right here, 105, and I bought it with cash, so I paid it with cash, so 102. And it is August 10. Right? And I paid with cash for $65. So let's see. Cash accounts, coffee mugs, supplies. 8, 10. Okay, I mean, it's kind of obvious what you did here. But if you want to put purchase supplies, you can for $65. And how did you pay for it? You paid for it with cash. So that means you're going to decrease your cash account. Here's your cash account. So in this case, you have $2,500 in your bank. And you spent cash on hand, and you spent $65, so you should have $2,435 left. Okay? Cash remaining in your pocket. So let's see what happened next. Next we have on August 12th is you end up buying a cash register with cash for $285.60. So that must include tax, okay? So in this case, you bought a cash register with cash for $285.60. So let's take a look. Do I have anything that is a cash register? We do, right? Count number 110. And I spent cash to buy it, okay, for $285.60. Okay, so let's see. August 12th, I purchase a cash register for $285.60. And how did I pay for it? I bought it with cash. So that means I have to update my accounts, and I would have to decrease my cash amount and increase my fixed asset of a cash register. Here it is. Okay. $285.60. And I spent cash to obtain that cash register. So right now, okay, I'm at $2,435, and I just spent $285.60. Okay, I should have a remaining balance in my cash account to be $2,149.40. Okay, cash. Okay, let's see what's next. Okay, August 16. Okay, August 16, you end up selling 25 mugs for $5.99 each for cash. And you charge sales tax to be 8.25%. So in this case, right, you sold 25 mugs for $5.99 each for cash. Okay? And you charge sales tax of 8.25%. So in this case, right, this is a transaction where, let's take a look at my chart of accounts. Okay? I sold something, right? What did I receive? Well, I gained cash, so that means I'm going to increase my cash, right? I sold something, so that means I had a sale, so I increased my sale. And then, of course, I charge sales tax, okay? Which is right here, sales tax payable, right? So that's what I need to do in here, right? Because I sold 25 of those, and I received cash for it. Okay, so this is where I could go ahead and make my note here that we sold 25 mugs. Okay, now I sold each mug at $5.99 each. Okay, so $5.99 times 25. My total sales is $149.75. Okay. I need to calculate my tax on it to be 8.25%. which will give me $12.35. So add those two numbers up together. $12.35 plus $149.75. I should get a grand total cash to be $162.10. Okay? $102.10. So then I need to update my ledger accounts. Okay? I received cash for sales. Which increased my cash by $162.10. Okay? Which will increase my balance because I earned money. Okay? And I'll get a grand total of $2,311.50. Okay? I increased my sales. Here's my sales. Sold 25 mugs. At $5.99 each. So that will give you $149.75. Right? $5.99 times excuse me, 25 gives you $149.75. Okay. Excuse me, I charge sales tax, right? Which was $12.35. So let me see. Okay, so I still have a lot of space on page 1. So then let's see what happened next after the 16. The 18, August 18, a customer returns 3 mugs for a full refund in cash. Okay? So in this case, we had a customer return 3 mugs for a full refund, okay, in cash. So in this case, right, we need to figure out how much money the customer is going to be getting, okay? So in this case, they're returning 3 of those mugs for a full refund. Okay, so that means, let's see, they're going to get cash because it says they're going to get their full refund in cash, okay? This is a refund. A customer purchased it, so that means it's a sales returns and allowance, okay? And of course, since we charge tax, you also have to give a portion of that tax money back, okay? So let's go ahead and calculate here down below. It is the 18, right? We're giving a refund. So this is going to decrease your sales by putting a sales returns and allowance. Okay, I'm going to do that for short. So that was 405. Okay. We had to give some sales tax money back. So we have to decrease our sales tax. And how did we pay that customer? We paid them back in cash. Okay. So first we need to figure out, the customer returned 3 coffee mugs. So I'll put this here. A customer returns 3 mugs, full refund. Okay. So in this case, right, sales returns and allowances, right? If we charged our customers $5.99 per mug and we are returning 3 of them, right? It's going to be for $17.97. Okay? Now, how much sales tax money am I going to be refunding? Because in this case, because this customer, when we sold them, they gave us money to contribute to the sales tax. So it is our job, because we no longer sold those items anymore, right? We're giving them a full refund. We must charge sales tax. So in this case, 8.25% is going to give you $1.48. Giving you a grand total of $19.45. So that's how much cash we have to give back. Okay, $19.45. Okay. So then, let's see, we need to update our ledger. Okay. First thing that we encountered was a sales returns and allowance. Here you go, sales returns and allowance. I'm going to push this down a bit. Sales returns and allowance. Today is the 18th. Return 3 mugs, full refund. Okay, still on page 1. Since a sales returns allowance is going to decrease the account by $17.97. Okay. We also have to give a portion of the sales tax money back. Okay. We have to give back $1.48. So that's going to decrease your sales tax payable down to $10.87. Okay. And of course, you're going to also decrease your cash account by $19.45. So that's going to decrease. So 2311.50 minus $19.45. You're going to get 2292.05. Okay. So let's see what's next. Then on the 20th, you sold 50 mugs for $5.99 each to customer A on an account. Sales tax was 8.25%. So in this case, you sold again to customer A on an account, okay? So you sold 50 mugs for $5.99 each to customer A on an account with sales tax. Okay? So that means, what does this mean? This tells me that I sold to a customer on an account. So that means I have somebody who owes me money. They didn't give me any cash. So I have an accounts receivable, right? I still did the standard sales and I charged sales tax. I sold 50 mugs, okay, for $5.99 each with a sales tax of 8.25%. Okay? So in this case, right, you definitely have enough space here to put this transaction, right? We have an accounts receivable. I think that was 103. Oh, accounts receivable is 103. Okay. And let's see. We had a sales and sales tax. So I can just copy this section right here. Okay. But this time I sold 50 mugs at $5.99 each. So in this case, I need to calculate how much I sold. So I sold 50 mugs, okay, to customer A. All right. So I need to figure out how much was my total sales. In this case, 50 times $5.99 will give me a total of $299.50. Right? Plus the tax of 8.25% gave me a total of $24.71. Okay, so that means in grand total, how much does this customer owe me? $299.50 plus $24.71. Okay, gives me a grand total of $324. So $324.21. Okay, $324.21. Okay, so let's see. I need to now update my accounts accordingly. So again, $324.21 is what that person owes me. Okay? So again, not checking, not cash, but accounts receivable. Okay? Today is the 20th, and you could say sold 50 mugs to customer A. Still on page 1, so therefore I gained $324.21. Okay. And I have to increase my sales. Right, for $299.50. Plus $149.75 is going to give me a total of $449.25, okay, worth of sales. And I also charged customer A some sales tax. Okay. For a total of, say that again, $299.50 times 8.25%, $24.71. 820. You increased it by $24.71. So you should now be at 2421. Nope. 2471 plus $10.87 should give you a total of $35.58. Okay. So let's see what's next. So that was the 20th, right? You sold the 50 mugs. What happened on the 22nd was that you sold 10 mugs for $5.99 each for cash with sales tax. So another sales that you have completed. Okay. Okay, so in this case, you sold an additional 10 coffee mugs, okay, for $5.99 each for cash, okay, and you charge sales tax of 8.25%. So then you have to record another sales. So in this case, you don't have enough space here, okay, so that means you're going to be going into the next page here. It is the 22nd, right? You sold for cash. Okay. Now in this case, we sold 10 mugs for cash, right? So 10 times $5.99 gives you $59.90. Okay, $59.90. And the tax on that gave you $4.94. Okay, So in this case, you got a grand total of $64.84 worth of tax. Okay, $64.84. So cash, it's $822. We sold, okay. Oh, we're on page 2 now. So we gain $64.84. So that should increase your cash account plus 64.84 should give you a total of $2,356.89. Okay. We sold, let's see, we have to do a sales. Okay, business, loan, equity, income summary, sales. How many items we sold? We sold 10 mugs at that $5.99 each. So that gave me a grand total of $59.90. So $499.25. $449.25 plus $59.90 will give you $509.15. $509.15. Okay. And how much sales tax did I charge? I believe we charged $4.94. Yep, $4.94. So your total sales tax of $35.58 plus $4.94 should give you $40.52. Okay, so that was your cash sales. Okay, so let's see what happened next. So August 25th, customer A pays in full for the amount that they owe you with a check. So in this case, we didn't give them any terms or anything because I'm not going to test you on that. Okay. So they paid you for the amount that they owe you with a check. Okay. So that means customer A paid for what they owed me. Okay. So, and they wrote a check to me. So that means I got to deposit that money to my checking account. So that means I'm going to increase my checking and I'm going to decrease the account receivable because it's that customer A paid off for what they owe. Okay? So in this case, it is August 25th. We received a check and we're going to reduce the accounts receivable, okay? Right? Received payment from customer A. So in this case, you have two options. You can either look back of when we sold to customer A, okay? Or you can go ahead and go to the account receivable to find out how much they owe me. But in this case, it's $324.21. $324.21 is what I'm going to be receiving. $324.21. Okay. So that means let's go ahead and decrease that account and increase my checking account. Okay, so here's your checking account. 825. Receive payment. Okay. For $324.21. So that should increase your checking account. Right now we're at 11,000. Okay. And we just increased it by $324.21. So you're looking at $11,324.21. Okay. And we are going to decrease my accounts receivable because we received a payment on the 25th. Okay. Receive payment from customer A. Okay. Which is going to decrease by $324.21. So that should give you an account balance of 0. Okay. Next transaction here on August 30th that you end up paying for the purchase of the coffee mugs with a check. Okay, so you end up paying for what you owe. Okay, and then so you end up paying for what you owe for August 30th. Okay, so in this case, right, I paid for what I owed with a check. Okay, so that means I am going to be writing a check out and I'm going to pay for what I owe. So in this case, accounts payable. I'm going to decrease my accounts payable by writing out a check. Okay. So at least I know that much, right? That it is August 30th. I'm decreasing my accounts payable because I'm paying for what I owe. And I'm doing that by writing a check out. So in this case, how much do I owe? Well, let's take a look. When did I purchase my coffee mugs? In this case, I purchased it on the 8th, okay? Accounts payable, so I owe right now $120. Oops, typo there, $125, okay? I owe $125, so that means I'm going to cut a check for $125. Okay. And then it's up to you if you want to say that you paid it, but in this case, that's straightforward. So that means I need to decrease my accounts payable. Okay, so supplies, cash register, accounts payable right here. It's the 30th, and payment for that $125. So that should bring your account balance to 0. Okay? And this money is going to be taken out from your checking account because you wrote a check. payment for coffee mugs for $125. So therefore, that's going to decrease your checking account. Okay, so right now it's 11. It's right now at 11/3/24/21, and I am making a payment for $125. So that will decrease my account to 11,199 and 21 cents. Okay. So let's see what happened next. Okay, right here it says on August 31st, you have a total of $50 worth of supplies left on hand, okay, which that is an adjustment entry, okay. Depreciation, 1 month of the cash register, right? Depreciation's an adjustment entry. And again, you have 18 coffee mugs on hand, which is a periodic inventory adjustment. So in this case, right, we are now done with my journals, because I need to complete the next step, which is the unadjusted trial balance, before we can actually do our adjustments. So let's see where that part is, okay? So we're on step 5 now. Let's go through all of these ledger accounts. Okay, right here. Step 5, okay, the unadjusted trial balance. So that means that's what you have to do first before you complete your adjustments, okay? So in this case, those last 3 transactions are adjustments, right? To adjust your supplies, to depreciate, and to also, so on and so forth, right? So in this case, the unadjusted trial balance, let's go ahead and plug in all of our numbers that we have here. Okay, so starting with the first account, okay, I can tell you right now, it's checking. Okay? Checking is your first account. And right now, I currently, from that last transaction we just completed, right, I have 11,199 and 21 cents. Okay. Okay, so my checking account is right now 11,199 and 21 cents. Okay. My cash account, okay, I have a total of 2356.89. Okay. 2356.89. 2356.89. $2356.89. Okay, on the debit side. Let's see what's next. So checking is done, cash is done, accounts receivable, right? I have a 0 balance on there, so nothing there. Coffee mugs, I haven't done my periodic inventory conversion yet, so nothing there. Okay. Supplies, I have supplies for $65. Okay, remember, supplies, we haven't adjusted it yet because we're at the unadjusted trial balance right now. Okay. Okay. After supplies is my cash register for $285.60. For $285.60. Okay. So after my cash register, okay, I haven't done the accumulated yet because that's a adjustment entry. Accounts payables next, which is my account balance is 0, so nothing there. Sales tax. I have a total of $40.52 in my sales tax. Sales tax is $40.52. Okay. Sales tax payable. Okay. Next under that is my business loan for $15,000. Okay. Okay. After that is equity. I don't have equity because I never had an original investment to begin with. Okay. Income summary. I haven't closed out my accounts yet. Okay. Sales. Sales. I got a grand total of 509.15. 509.15. Okay. Sales. Okay. Then I have a sales returns and allowances for $17.97. For $17.97. Okay. Next is cost of goods sold. I haven't done my periodic inventory conversion yet, so no cost of goods sold. Freight expense. Freight expense for $25 and purchase expense for $100. And then rent. Okay, so there's no purchase returns. So in this case, I have freight expense and I have purchase expense. Okay, for $25 for the freight and $100 for the purchase. Okay. Okay, after the purchase returns allowance, there's nothing there. I didn't return anything. I have a rent expense for $1,500. No supplies expense yet, and no depreciation expense yet. So the last one I have here is rent expense for $1,500. Okay, so however you want to tally up your totals. Okay. Okay. I got a grand total on my credit side to be 15,549.76. Or sorry, 67. Okay. And if you want to double confirm on your debit side, let's see. 11,199.21 plus 2,356.89 plus 65 plus 285.60 plus 1797 plus 125 plus 1500. I too also get 15,549.67. So in this case, my debits does equal my credits. Okay, so that means I can go ahead and proceed to step 7 and 8 of the accounting cycle. Okay, so that means I need to now do my adjustment entries. Okay, so in this case, the first adjustment entry is going to be, So first adjustment entry says here that on August 31st, you had a total of $50 worth of supplies left on hand, meaning you used up $15. Okay, so in this case, we have to adjust our supplies. So that means my supplies are going to be decreased. Okay, and what account should I represent that? The supplies expense, right? Supplies expense means that, right, we use the items. So in this case, supplies expense is going to be the account 615 and supplies is 105. Okay. So again, however you want to do this, I'm just skip the line here. Supplies expense. Okay. And of course, you're going to adjust your supplies. Now it says that you have $50 worth of supplies on hand, okay, or left. That means you used up $15. So that means I used $15. So that means I am going to record that I used $15. Okay. So of course, that means I need to adjust my accounts accordingly because I end up using the supplies. So I need to adjust my supplies accordingly. So right here, rent expense, supplies expense. Today is the 31st. Used up $15, which, right, we know because it's going to be a debit for $15. Okay, so that means I need to adjust my supplies to reflect that I no longer have $65 worth of supplies. Okay, adjustment. Okay, and we use up $15, so 65 minus 15 should give you $50 remaining. Okay. Next question. Second to last, August 31st. Depreciation 1 month worth of the cash register, because the cash register has a 3-year lifespan, no salvage value, and we're going to use straight line. Okay, so in this case, I'm going to go all the way down to the bottom of my page here to go ahead and see my depreciation table. So you got 1 month. You need to depreciate 1 month of the cash register, 3 years life, 3 years life, no salvage value, and straight line. So first, let's go ahead and see when we actually purchased that cash register. We purchased it on August 12th. So therefore, we must depreciate it for the month of August. So let me scroll real quick to get to that depreciation table. Okay, here we go. Right, depreciation method, right? Straight line, okay? Asset, cost, okay? How much did this item cost me? All right. Sorry for that, guys. Okay, so the asset cost me the cash register cost me $285.60. Here you go. So I have to depreciate 1 month and it cost me $285.60. Okay? 3 years lifespan, no salvage value. Okay? So therefore, what is my depreciation basis? If I'm using straight line, asset cost minus salvage value. In this case, I have no salvage value. So $285.60 is going to be my basis. Okay? In this case, what is my estimated useful life? We said it was 3 years. So therefore, my rate is going to be equal to 1 over the estimated useful life. So therefore, 0.3333. Okay? And ongoing. Now, in this case, right, my depreciation expense is going to be it's going to be my basis times rate. Okay, so that means I have to calculate $285.60 multiplied by 0.333333. Okay, and what is that going to equal me? 285.60 times 0.3. 0.333333, okay, times 285.60 is going to give me $95.20. But that doesn't look right. If I were depreciating the next month for $95.20, then it's going to depreciate pretty quick. In this case, I need to depreciate it for only this month. So I need to divide this whole thing by 12 because $95.20 is for the whole year. So I need to figure out what this $95.20 is divided by 12. And that will give me $7.93. So that's how much depreciation expense I need to have is $7.93. Okay, because it goes 9 so $7.93. So that means I have everything that I need to have for the journal. Okay, you can finish the rest of the table, it's up to you, but I got what I need, which is the depreciation expense. Okay. So in this case, let's take a look at my chart of accounts. What accounts am I supposed to be using? Okay. So we know that we just did a depreciation expense. So therefore, that's the first one, $650. And in this case, right, we cannot take off the cash register right away, right? We have to use the accumulated depreciation for the register, which is account number 115. Okay, so here we are, journal. It is 8/31, right? We just did depreciation. expense, $650. And then we have the accumulated depreciation for the register, okay, for that $7.93. Okay? $7.93. Okay? So let me see. Supplies, cash register accumulated right here. 8/31, August depreciation. Okay. Which will decrease your account by $7.93. Okay. Or actually, in this case, it's a contra account, so it will increase on the credit side. And I will increase my depreciation expense account because that's what I just did. Okay. Depreciation expense. 8/31. August, register. For $7.93. Okay. Last adjustment I have. Okay. Last adjustment I have here on August 31st. Okay. You have a total of 18 coffee mugs on hand. So that's what I have. My ending balance is 18 coffee mugs. So let's go to the bottom of this page here to look at my inventory table. Here you go. Okay. So in this case, I have on the ending balance is 18 cups left, 18 mugs left. So let's tally up my total. So I have a total of 100 mugs at $100 purchase with $25 worth of freight with a total cost of $125. Now in this case, I have to use FIFO. I only have one batch of inventory here, so there's really no need for that. So in this case, that's what I have. I have 18 units left, so that means I must have sold a total of $82 mugs. Okay? So how do you want to do the cost of goods sold? In this case, I only have one batch of inventory, and my cost per item is $1.25. So whether you just go ahead and figure out what, if you want to figure out what the cost of goods sold is, you could take your $82 and or 82 units and multiply by $1.25 each. Okay. You'll get 102.50. And that means your ending balance should be $22.50. Right? Okay. And if you actually add up these totals, it does equal $125. Right? So there you go. Now I can complete my conversion entry. Okay. I got $22.50 worth of coffee mugs. I sold $102.50 of coffee mugs. Okay, so how do I do my conversion entry again? Well, let's double check my chart of accounts. Okay, my inventory item is coffee mugs. Okay, I need to do a cost of goods sold. So let's see, cost of goods sold right here is 506. 506. Coffee mugs is 104. And then I have to I have to zero out my purchase expense and my freight expense. Okay. No purchase returns and allowance, right? My account there is empty. So in this case, my purchase expense and my freight expense. Okay. So let's go ahead and complete my conversion entry. Okay. It is 8:31, right? We got some coffee mugs for $22.50. We have cost of goods sold for $102.50. I forgot the account already. Let's see. Cost of goods sold is account number 506. Okay. And then I have to zero out because I'm doing a conversion entry where I am converting my purchase expense and my freight expense, right, to inventory. So that means I have to zero these accounts out. Okay, for $125. Again, conversion entry. So let's go ahead and enter those values in to my ledger. So now I do have coffee mugs, right? How many coffee mugs do I have on hand? I have 18 coffee mugs on hand. Okay. For $22.50. Okay. And I have my cost of goods sold. So business, equity, income, sales, sales returns, cost of goods sold right here. Okay, I sold 82 mugs, right? Which gave me a total cost of $102.50. Right? I need to zero out my freight expense because I did my conversion. Which zeroed out my account here. And same thing here. Okay. So there you go. I did my adjustment entry. I did all of them. So let's see. Here's my, okay, so I need to complete the adjusted trial balance here. Okay, so what I'm going to do is I'm going to stop here for a break, and then we'll finish up the rest of the class, rest of this when we come back from the break, okay?